Welcome to The Explainer. This week, global markets are pretty much frozen, just waiting. Everyone's on the edge of their seats for two massive events that could send some serious ripples across the entire economy. We're talking about a huge geopolitical meeting and a crucial economic test.
Okay, so let's get right into it. On one side, you've got raw geopolitics, a high-stakes summit this Friday in Alaska between President Trump and President Putin. And on the other side, you've got hard economic data, the U.S. inflation numbers for July, which are actually out today. Now, these two things might seem totally separate, but they are about to collide, and honestly, the outcome could set the tone for the markets for months to come.
So here's how we're going to break it all down. We'll start with why the market is so tense right now. Then we'll get into that geopolitical gamble and the all-important inflation question. After that, we'll connect all the dots and wrap up with the key things you need to know.
So what's the mood out there right now? Well, in a word, it's cautious. The market is really in a holding pattern. But there have been a couple of recent developments that have given us at least some stability and kept things from freezing up completely.
First, markets kind of breathed a collective sigh of relief when the U.S. and China agreed to hit pause and extend their trade truce for another 90 days. That really calmed investors' nerves about a full-blown trade war, basically putting those fears on the back burner, for now anyway.
And second, in a really specific but important move, President Trump himself came out and clarified that gold bullion will not be getting hit with tariffs. This shot down some speculation that was floating around and definitely settled some nerves in the precious metals market. But let's be clear, these are just the warm-up acts for this week's main events.
All right, now for our first main event, the geopolitical gamble. This whole thing centers on that high-stakes meeting between President Trump and President Putin happening this Friday. And initially, hopes were pretty high that this could actually lead to a real breakthrough on the war in Ukraine.
And this is where it gets really interesting. President Trump himself is the one lowering expectations. By calling it an exchange of ideas, he's basically signaling that a major peace deal is probably not going to happen. So the big question is, why? Is he just playing hardball? Is this a bargaining tactic? Or has Putin already shut that door?
The stakes here are just incredibly high for everyone involved. For Ukraine, there's immense pressure. For Europe, it's all about containing Russian aggression. And for Russia, a deal could mean getting rid of some really damaging secondary sanctions. To get everyone on the same page before this, Trump and Vice President Vance are actually holding a pre-summit online meeting with European and Ukrainian leaders. The outcome of Friday's meeting is anybody's guess.
Okay, now for that second pillar. And this one is landing today, the U.S. Consumer Price Index, or CPI data. This one number, seriously, has the power to reshape the entire economic landscape and basically tell the Federal Reserve what to do next.
And this timeline, well, it shows you exactly why the market is so concerned. We've seen this steady month-over-month climb in inflation. Look at it, from 2.3% April up to an expected 2.8% for July. A lot of this is being driven by the administration's tariffs finally trickling down to consumer prices, and the market is just waiting to see if this trend is about to speed up. This upward creep in inflation, especially when you combine it with some other data that's already hinting at an economic slowdown, it brings up a really dreaded word, stagflation. It's the absolute worst of both worlds, and a high inflation number today would make that risk feel a lot more real, which just makes the Federal Reserve's job a whole lot harder.
The impact from these tariffs has been super tricky to pin down. They didn't happen all at once, they rolled out gradually. Plus, companies were smart and stockpiled a bunch of goods in advance, which kind of cushioned that initial price shock. But that buffer might be gone now, and today's data is going to be a huge clue as to whether we, the consumers, are now paying the full price.
So this brings us to the biggest question of all. How do these two giant, seemingly separate events, the Alaska Summit and the inflation report, how do they actually come together and move global markets?
It really just boils down to two very different paths the world could go down this week. The best case scenario for markets is a double win. You get low inflation data, which takes the pressure off the Fed, plus you get real progress in Alaska, which lowers that geopolitical risk. The worst case, it's the exact opposite, stubbornly high inflation and a failed summit. That combination would almost certainly trigger a major sell-off.
So what does all this mean for the assets you actually hear about every day? The ripple effects are going to be immediate. So let's just break down what's at stake for gold, the dollar, and for bonds.
Gold is caught right in the crossfire here, just hovering around $33.50 an ounce. A peace deal would actually be bad for its price because demand for safe haven assets would drop. But if today's inflation data comes in hot, that could send gold soaring. It's literally being pulled in two different directions at the same time.
The US dollar strength is also just hanging in the balance. Its direction is tied up in both the perception of Trump's trade policy and, of course, the geopolitical outcome of the talks with Russia. You could say it's kind of a barometer for America's standing on the world stage this week.
And finally, U.S. government bonds, with the 10-year yield holding steady at 4.29%. For bonds, it is all about that CPI data. A higher-than-expected inflation number would almost certainly push this yield higher, while a soft number would likely send it tumbling. It's that simple.
Okay, so let's boil all of this down. I know there are a lot of moving parts, but here are the key things that you really need to be watching this week. So, to wrap it all up, keep your eyes on two main fronts. On the economic side, it is all about that CPI number. If it keeps climbing, it'll confirm those fears about tariffs and put immense pressure on the Fed. That's what's going to drive safe havens like gold. Then, on the geopolitical side, the summit's outcome has a direct line to sanctions risk. And please don't forget, that China truce, it's just a temporary fix for a problem that is not going away.
And we'll just end with this final thought. This week is a perfect storm, where the raw power of geopolitics is colliding head-on with the hard reality of economics. It leaves us with a fascinating question. When these two immense forces meet, which one is going to blink first? We're about to find out.